You are listening to Mining Stock Education.
As far as the generalist investor is concerned, they're pretty much still preoccupied with Microsoft and Nvidia and AI stocks because they're making all-time highs again, and they've forgotten about gold stocks again, most of them. So gold stocks still have a lot of catching up to do with the gold price. I mean, the gold price can just remain above $3,000 an ounce for the next year. And these gold stocks will still have a long time to catch up.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, and in today's show, you're going to get the monthly update from Dr. David Erfle from Junior Miner Junkie with a Y.com. David, welcome back onto the show. And as we always do, let's start off with your gold and silver price commentary. Silver is very strong, knocking on the door of $40 a share. Let's start there. What do you see in the silver price?
Yeah, well, today, Monday, the July 21st, silver just closed the COMEX about 45 minutes ago for the first time above above $39 in 14 years. So that's a 14-year daily high on the silver price, and it continues to show relative strength to gold as well, as do the juniors. The gold price, it's doing what we want it to do here, right? I mean, we had a sharp move up to $3,500 an ounce, and then we had a 10% downdraft correction, and now it's consolidating within yet another bullish symmetrical triangle, and it's about 13 weeks now. This symmetrical triangle, it just consolidating bullishly inside this triangle during the slow summer months, right? I mean, this is a time of year where people are thinking more about vacations than they are thinking about trading. The volume's lower, and the gold price just continues to hold above 3,300. There's really good support at 3,300. And the last time we had this had an extended bullish symmetrical triangles was leading into the U.S. election, right? I mean, everybody was expecting the market was expecting Trump to win, and that he was going to be very bullish for the gold price. And then once it was learned that he was going to win the election, the gold price, we had to sell the news correction, and that it corrected about 10%, and it remained inside of about a 13-week, 14-week consolidation, some bullish symmetrical triangle. But at that time, the gold stocks were selling off into the end of the year. So we had the gold price was up 27% last year, yet the gold stocks were only up 13%. So they were showing relative weakness into the end of the year. And now the first half of this year, the gold price was up to another 25%, yet the gold stocks were showing 2 times leverage, but the juniors are even more bullish because they're now leading along with silver. So this is a very bullish situation we have in this sector right now.
Do you think there's money on the sideline that's waiting for an even more meaningful pullback to enter?
Absolutely. I mean, if you take a good example is you take a look at the stock of Newmont, right? So Newmont is the largest, most liquid gold stock. It's the only gold stock that's on the S&P 500, right? If you're a generalist investor, you know nothing about gold, you know nothing about gold stocks, that's the stock you're going to get into. And if you take a look at what happened to it recently is Newmont had been leading the sector higher, right? GDX and GDXJ are consolidating their recent gains, right? And they're consolidating within their own bullish symmetrical triangle. And Newmont was bifurcating higher. That's telling you that generalist investors are getting into this stock. But last week, the CFO abruptly quit, and the stock just tanked, and it went down to test its 50-day moving average, an area where both GDX and GDXJ are consolidating above. So all it did was catch up to where GDX and GDXJ were correcting, and lo and behold, today already, it's trading back up at 52-week highs, and it's leading the gold stocks higher again. Because on Thursday, they're about to announce their Q2 earnings, and the gold price is almost $400 higher than it was in Q1. And in Q1, Newmont announced $1.2 billion of free cash flow. They announced costs were going down while their margins are soaring. So I wouldn't be surprised if this Thursday they announce free cash flow of at least 1.5 billion. And that's a yearly run rate of 6 billion in free cash flow, right? And yet the share price is still trading well below where the gold price has gone. So these companies are about to announce incredible margins once again, even higher margins than they had during Q1. And as far as the generalist investor is concerned, they're pretty much still preoccupied with Microsoft and Nvidia and AI stocks because they're making all-time highs again, and they've forgotten about gold stocks again, most of them. So gold stocks still have a lot of catching up to do with the gold price. I mean, the gold price can just remain above $3,000 an ounce for the next year, and these gold stocks will still have a long time to ways to go to catch up. But it sure looks to me like 3,300 is really good support here for the gold price, and it's this morning it's trying to break out of that symmetrical triangle. I don't think it will. I think it's still got more backing and filling to go, because when the gold price ran up to 3,500, it got extremely overbought. And this is all very bullish for the gold price and for the sector and for the mining stocks.
Newmont also in the last year got, I think, about $2 billion from selling some of their tier 2 and tier 3 assets. So they are $3 billion. Okay.
They sold just recently. They sold some of the shares they got for some of the sales, and they made another $500 million. So I think it's up to $3 billion that they made. They told they front ran the numbers, telling the market that they expected to make between 1.5 and 2 billion on the sales, and they actually made 3 billion.
So what will investors demand to be done with that money? Give it back to us in dividends, or go get ounces of reserves, or get ounces of production? Where do you see that money going?
I see all these companies that they're going to have to add ounces now because they've done a great job of shoring up their balance sheets. They've never been this financially healthy ever since I've been following gold stocks for the past 20 or so years. I've never seen balance sheets this healthy, right? They're paying dividends. I mean, back over 20 years ago when I got in this sector, I mean, dividends weren't a reason to get into gold stocks, and B, they just weren't paying them. So now they're paying dividends, they're buying back shares, and they've got all this cash. They pay down debt. So now investors, they want more ounces. Okay, we got to have more ounces. So you're already seeing M&A picking up. We had Anglo Gold just take out Augusta last week in Nevada. I think I talked about last time we talked about how we've seen a lot of M&A in the silver space, because there's not a lot of top tier silver assets out there, and the ones that are the single asset producers have already been gobbled up, most of them. So I think now that they're going to concentrate on the ones that are controlled by juniors. There's several of them that are controlled by juniors that look like, judging by their share price, they're about to be taken out. And fortunately, myself and my subscribers and I accumulated shares in these companies late last year and this year, expecting this to happen. So I expect M&A to start ramping up here because, like I said, these companies are going to be announcing fantastic margins and fantastic Q2 results here, starting with Newmont on Thursday. I expect Newmont to blow it out of the park once again with their earnings announcement.
Dave, you've shared on the show many times over many years, coming on the show every month, that once a stock triples in your portfolio, you begin to take some profit. Is that a categoric rule across all commodities, or do you treat silver stocks differently than gold stocks, differently than uranium or copper stocks? What commentary can you provide here?
If it's a junior, and first of all, my criteria before getting into it is they have to have at least 3 times upside. So once they triple, I automatically take a third off the table. That gets back my original investment capital, and it basically I can hold the rest of it risk free, and it's easier to hold something risk free. The ups and downs, you can deal with it a lot easier if it's risk free, if you've taken your investment capital out of it. So if it's a junior, That's my rule. And also, if it becomes 15% of the entire portfolio, I'll trim it even more. That's happened with one of my stocks already a couple times in Montage Gold. The stock is now up over 600% for us now. So once it gets to become a 15% of my portfolio again, I'll shave a little more off.
Mm-hmm. You're also interested in copper now. So do you look at exclusive copper, or do you like copper and gold, or copper and molybdenum is doing decently as well?
I like copper gold. I really like copper gold. There's a couple of companies that I like that are on my watch list right now that I've recently had to sell 1/3 of a couple of companies, and there's another one coming up that is close to tripling again. I'm gonna have to sell 1/3 of that, so that's gonna free up some more capital. And what I'm doing now is I'm going down the food chain into higher risk PEA stage companies, and I'd like to add at least one, maybe two more copper related juniors. I have a couple, and I'd like to have one or two more.
So regarding tax strategy, when you are trading in a taxable account, you have your retirement account, then you have your other account that's taxable. In the United States, for international listeners, if we sell a stock less than a year, we're taxed at our income rate, which Dave's in California with a very high income rate, and then our federal tax rate can be 39% as well. So literally, you could give up half of your profit, or maybe even more, on a nice short-term gain if you're in the highest tax bracket. So giving that context, do you factor in the tax ramifications?
Absolutely. I preach that in my newsletter also. We have to have a lot of patience. We've spent all this time, I've spent all this time, all this research in all these companies, and to make sure that I'm getting into the right ones at the right time. Then you have to have the patience to let them pay off. I mean, it's taken a while because, the last few years really haven't been good, right? I mean, I've basically been treading water in the portfolio the past few years, waiting for the breakout. And now that the breakouts come this year, my account's up 95% this year, and that's shared with my subscribers, so they're very happy as well. But yes, I mean, and that's what I preach. I mean, we'd rather have long-term capital gains, because long-term capital gains are taxed at 15% as opposed to 28%. Plus, if you're trading in junior accounts, right, and if you're trading in an account outside your country, you're paying more commission fees as well. I don't pay a lot of commission because I don't trade a lot. So you want to keep your commissions down. You want to keep your tax rates down. And to do that, you have to have long-term capital gains, which goes with having patience in the sector and let your investments pay off. So, the companies that I've sold recently that have tripled and more, those are long-term capital gains. So they're only going to be taxed at 15%.
Do you look at any commodity ratios for new opportunities, like gold versus oil, gold versus platinum? Are there like those ratios that you look at, Dave, and maybe you could see an opportunity in just a mean reversion?
Well, actually, absolutely. The best is the gold silver ratio, right? I think I came on your show a couple months ago and I said, I guess
other than that one,
because copper gold as well. I mean, the copper gold ratio was screaming that, hey, copper is undervalued. And then look what happened. The copper price screamed well above $5 an ounce here recently. And now $5, which used to be a multi-year strong resistance level, is now attempting to become a strong floor. So that is huge. So absolutely, you want to take advantage of the companies that are digging, the metal out of the ground, that is showing that the ratios in favor of that metal. And like I said, when the gold silver ratio went up to 107, I mean, that was screaming, hey, buy silver, get into get into silver juniors and, and accumulate the best silver juniors, and you'll do very, very well. And that's, we did that before the ratios grew that high with my newsletter, and, our silver stocks are killing it. So this is what you want to do. You want to take advantage of the metal that is out of whack and is showing that it's undervalued in relation to another metal.
You're still not doing any private placements, not even life financings with no hold? Nope. That's still your strategy?
Yeah, I closed my private placement account a couple of years ago, and I have no interest in going back. Canada obviously doesn't want my money. They don't want U.S. money because they keep making it more and more difficult for retail investors like myself to take part in these financings and make money. They keep changing the rules. They keep making it more strict. Especially the legend removal process got completely draconian. So like I said, a couple of years ago when I closed my account, I'm like, this doesn't make any sense anymore for me to partake in private placements, because these juniors are basically trading at perpetual warrant prices. And I turned out to be right in a lot of them, because some of them have skyrocketed. And unfortunately, I own several of them for myself and my subscribers. And we're doing very well without having the benefit of having a private placement account.
You and I have talked many times about the valuation, the higher valuation that a miner can get when you list on a major exchange in the U.S. The NASDAQ in particular seems to value a lot of these miners pretty high. Dave, there's a couple companies, I'm not going to mention them, but they're multi-billion dollars on the NASDAQ, and they're not much more than speculation. They're a little more than speculation, but they're not much more, which causes me to reflect and say, do the people even understand what they're buying, or do they just say, I'm buying some sort of mining company and we're in a commodities bull market? How do you view those things? Because the detail that you put into analyzing these microcaps that trade on the OTC versus the valuation you see on the NASDAQ for what I would call a speculative opportunity that's not worth $2 billion.
Yeah, I don't even mess with those companies, right? I mean, I try to stay within juniors that are trading at less than $500 million market cap. Those are true juniors. Right. So, I mean, if you take a look at GDXJ, I mean, that J should be replaced with an M, because they're mostly mid tiers. There's most of the companies are over $1 billion, over $1 billion or $2 billion. So, I mean, that's my area of expertise, and that's where the leverage is, and that's where the big upside is.
But you like to buy some of them, though. I noticed some companies you're transitioning into even more. They are listed on the major exchange, and you're willing to.
But they're less than 500 million market cap.
Yep. So then, do you ever analyze those that are the ones I'm referring to, but not naming, that are multi-billion dollars versus what you're entering into? Do you just look at what I do is I look at the market cap. I go through the presentation and I say, no, based on going through literally probably 2,000 presentations since I've been doing this, I say, no, thank you. I mean, that's how I screen it. How do you do it?
Pretty much. I mean, because as you know, I also share my IRA account with my subscribers, which I've been investing in miners for the past several years in. And, every once in a while, I will add a new name and I will flesh it out for them on why I'm doing it, because I have the same mentality. Basically, I would like to see at least a double upside before I buy it. As far as a miner is concerned, I know it's a stretch to see a triple in a lot of these miners with some of these valuations, but a double is, if I see a double, then I'll get into it. It might be a little higher risk. I might have to go down the food chain a little more to where it's a growth oriented producer. That's a smaller cap miner, but it does have a big board listing, but it doesn't have but it doesn't pay a dividend. So I've been doing that lately. I did that with a copper junior, and I did that with a silver junior recently. And the silver junior is already up 70%, and the copper junior is up like 20%. So there is huge upside in these companies that have the big board listing, and some of them are still pretty much being ignored by the general market.
Yeah, it's crazy because I've been going through like every miner I can find on the NASDAQ. I just initiated a position here recently, and they announced it was a registered stock too, Dave. A lot of what you and I speculated in is not registered stock. They register the prospectus, they announced there's a pricing, and then I was waiting. And then, boom, they announced the pricing about 30% apparently about below where the stock was trading at. So the stock falls below that. I was able to finally pick it up. That was about 9 months on my waiting list. But the valuation makes sense to me at that point. Right. This is on the NASDAQ. But then I look at some of the other NASDAQ miners and I'm like, what in the world? Do people even understand what they're buying? I don't know. I still think that what I'm getting at is I still think there's an information arbitrage even on the NASDAQ.
Absolutely. Yeah. And they don't research those companies as much either. They say, oh, it's got a big board listing. It's on the NASDAQ. It's got this market cap. Then it must be a pretty good stock.
I met a fund manager recently who was invested in one of the companies that's multi-billion dollars that I don't think is probably worth $20 million. And I told him the reason, and I sent him some information why you might want to sell that stock, because you're sitting on a 5-bagger, which I think could go to a 90% loss quickly if a lot of the story falls apart. So I was kind of shocked that even managed money would invest in some of these companies. I know for the audience that may say, Bill, you're not naming it. Yeah, I know I'm not naming it, but I'm bringing up an observation that I'm seeing as I've spent a number of hours looking at NASDAQ miners.
Yeah. I know, because a lot of these managed money funds, right, they don't know very much about gold stocks either, right, because they've ignored them for so long. Gold stocks have been in the doghouse for over a decade as far as, Wall Street and money managers are concerned. I think they're still in the doghouse as far as Wall Street is concerned. I mean, if you turn on MSNBC or Fox, they barely mention gold. I know people that watch those channels religiously because they know what I do. And they're like, how are you doing so well in gold? I don't even see it mentioned when I watch MSNBC or I watch Fox.
What about Tether's investment in Elementis royalties, though, right? Like, are the crypto bros becoming gold bugs? Don't you think that there is outside money, though, that's beginning to take notice?
I think Bitcoin, Tether, they've become a gateway into the gold stocks. And I think Tether acquired a 32% interest in Elemental royalties with an option to increase ownership to 50%. And they own, I think they own 8 billion in physical gold also. So yeah, and the stable coins, I mean, that's the gateway into digital gold.
Yep. So the JMJ, Junior Miner Junkie Sentiment Indicator, I always get this from you before you go. As expressed in interest and subscriptions, it's just, what are we seeing, Dave? An uptick?
We're seeing an uptick, but, we're not seeing my door being broken down. I mean, we're definitely seeing an uptick in interest. Yes, I mean.
And then what type of subscriber? Is this more generalist, hot money, trend chasers, or is this people with some understanding of what they're buying before they get to you?
Judging by the questions I get from some of them, they're learned in the sector. I don't really, I don't really believe I've seen very much what I would constitute generalist newbie retail get into my newsletter quite yet. I think there's one or two. I mean, there's a few, but most of the new interest I'm seeing are learned investors, people that are learned in the sector. They understand. They understand the upside in the sector. They just want to make sure they're holding the right stocks to take advantage of that upside.
And if they're looking at your portfolio for the first time, because you share updates on your portfolio weekly, do you see any FOMO from your new subscribers when they see you're up 600% on Montage and you're up 300% on this Silver Junior? Do they still see the upside, or what are those interactions like, if any?
Well, I think they do, because I'm not getting a lot of panic questions like, how come you're not selling more? I think I had one question like that. How come you're not selling more several months ago? And I'm really not getting questions.
Those are the traders that subscribe to you, maybe.
Those are the traders, yeah, probably. But yeah, I mean, they understand the upside. But Bill, what I try to do is I basically try to cut off. I try to head off all the questions that I think are going to be asked, and I answer them in my newsletter already. So, because I do technical analysis and I explained to where I think the sector is going in the short to medium and long term, and where it possibly could go in the short term if the gold price loses $3,200 an ounce support, because I think 3,200 is really strong support. But if we're taking a look at what's happening with the stocks, both GDX and GDXJ have now caught up technically with the gold price. And what I mean by that is the gold price is consolidating above its 50-day moving average. And both GDX and GDXJ are doing the same. In the past, we'd have big sell-offs. We'd have small sell-offs in the gold price, and we'd have bigger sell-offs in the gold stocks. But now, over the past several years, the summer months were basically a time for resource sector speculators to consider which juniors they're going to sell. They're going to be selling for tax loss, right? What are tax loss candidates, as both liquidity and investor interest generally dry up during the summer months, right? Especially if the street is expecting the company to go to market before year end, because junior dilutive finance announcements are sold during bear markets. But now, with the capital market opening even wider here in July, the TSX Venture is already up 9% this month, right? So you've got the Venture is continues to make 52-week highs. It's make 4 consecutive 52-week highs, and it's up 9% this month, while the GDX and GDXJ are consolidating their recent gains. So juniors are really outperforming the miners now. So now with the mining sector in a bull market, quality junior finance announcements are being bought. So there's no more games being played with these shares anymore by the street. The street would see, a company put out a PEA and say, wow, that's a great PEA. It looks like they're going to be drilling more. Wow, they're going to need more money. So I'm going to short the stock because I could get it cheaper, and they're probably going to have to issue a warrant. None of that is happening anymore. Okay.
But they just play it to the upside though, Dave, don't they? Yeah.
Exactly.
Yeah. And these things are like, they're self-fulfilling prophecies that you and I have spoke about, to where when you got these gains and you're feeling good and euphoric, you take those gains and you put it into the next play. So there's more money for the next miner to continue the bull market. Right. But on the way down, everybody gets so pessimistic that once you recoup out of that failed investment, you don't redeploy it into the next junior miner. And so,
but that's what the price action is telling you, right? When you see the juniors now consistently outperforming the miners while the miners are correcting, that's telling you that sector professionals are taking some of their miner profits and they're rotating it down into the food chain, into the higher risk juniors. And I think we talked off mic before we started to press record here that I saw PEA stage juniors, 3 PEA stage juniors that I follow or own stock in, announced $30 million financings last week. They were all upsized, and they were all taken by they had strategic partners in the finance, meaning so these majors, these mid tiers, they're taking more strategic private placements. They're getting into these stocks that eventually they might be taking over, because they understand that now that they're flush with cash and they've got these and they've shored up their balance sheets, like we talked about earlier. They have to start adding ounces, and to add ounces, it's a lot cheaper to buy ounces on Bay Street than it is to basically try to go out and explore for more on your own.
Well, Dave's website, again, is juniorminerjunkie.com. You can go check it out. He has a free weekly email list, and he also has a paid service. More information at his website. Dave, as always, I appreciate chatting junior mining stocks with you, and I'll chat with you again on the show in 30 days.
Absolutely, Bill. Always a pleasure, and I look forward to next month as well.